Ladies and gentlemen, we are your three bucks. Eric, Teej, and B. And we are hot off the weekend. Hot. Memorial Day weekend, baby. So guys, what was your weekend?
Well, I'm hoping you guys are going to say it was a great weekend because it was spent with me.
No, that's why we let you lead. No, I actually had a great time. Very good time at Teej's place. The weather was beautiful. All my really good friends were there, and the food, as promised, was on point.
Well, you know, I like my meat how I like my Joes. Sloppy. See, the secret with the Joes is the spice, the afterkick spice that I throw in there.
Yeah, you know, some people were saying that they didn't taste the spice, and I definitely tasted something spicy.
Yeah, I didn't notice it too much. I mean, what do you put in there?
Spice. This is what I'm saying. I put spice in there.
Secret spice.
It's the secret spice.
This is a guy that makes meatballs every year, and he just puts a concoction of random stuff in there, like Hawaiian barbecue with Asian zing mixed with Jamaican jerk.
Hawaiian, Mediterranean, Jamaicans, all the ins. I put it all in there, and guess what? I get nothing but compliments every single time.
How do people feel the next day?
Well, they probably feel fine. I don't know how their back end feels. That's something a little bit different because I know my back end feels a certain way.
Hey, listen, we all know that, you know, every now and again when you want to get something good, you got to be willing to deal with the consequences.
The sacrifice. You know, we didn't have though. I guess it was kind of missing is hot dogs and hamburgers.
Let's be real, man. You probably shopped last minute and there was no dogs left.
True. We got ground beef in the freezer.
Speaking of hot dogs, I actually did find this interesting. Do you know that a hot dog is technically a taco?
Just get out of here. Why? Because it's in...
I'm dead serious. Taco is defined as so it's a piece of protein or meat between three edges of starch. And so by definition, they say a hot dog is a taco.
This is the kind of information you get off this podcast, so you should listen every week.
You thought you came here for stocks. You came here to learn that a hot dog is a taco.
Well, hey,
so
you know what? It is Tuesday.
Yeah.
So Taco Tuesday. It makes
it's
sense.
Taco Tuesday. That's why I had to drop that fact on you. It's Taco Tuesday.
But hang on. What about the theory that a taco is a sandwich?
Yeah, that too. I know, dude. It's mind-blowing.
So hot dog sandwich?
Hot dog is both a sandwich and a taco. And they're all of it's a sandwich.
There's different kinds of tacos. You have soft tacos. We have a buddy of ours named Carson. He's a soft taco.
That is true, though. What are you gonna have a hard shell with a hot dog?
I'm interested in that now. That's interesting.
Oh god, crunchy and chewy all at the same time.
All right, boys. New quarter. The summer's here. We're gonna jump into the show. We're gonna be talking about streaming services, and comparing them all. Exactly. And we're gonna jump into our sentiment about IPOs. So stay tuned till the end. We also have our hunts of the week. Let's go.
This week's impacts on your Daily Buck. We did it. The month of May saw a bump with the S&P in the green and weekly gains on all indices for the first time in 2 months. GameStop releases NFT and crypto wallet, while abroad, South Korea is among the first national governments to invest in the Metaverse. The GDP contracted by 1.5%, which was worse than previously expected. The Fed minutes are out, suggesting they will remain flexible while they fight inflation. And lastly, President Biden meets with Jerome Powell this week on the topic of inflation. All this and more and how it impacts your Daily Buck. Hey guys, we're going to talk about a lot of great stocks on today's show. Keep in mind that none of these are buy-sell recommendations. These are for entertainment and educational purposes only. It's the green grass of the S&P 500. Guys, we were green this past week. All major indices were doing really well. The S&P was actually finished off green in the month of May, if you can believe that, with how bloody it felt.
It couldn't have come at a sooner time. I mean, I really needed it for my portfolio. I obviously am someone who picks more volatile, speculative stocks. You know, if you guys have been tracking my returns to the hunts of my weeks.
Monster.
Yeah, that being said, you know,
scary. A scary monster for sure.
No, these weeks go a long way for me in feeling good about what I'm doing again. So,
but whoever said, you know, the sell in May and go away, you know, in fact...
Whoa. I've been saying for the longest, stay AMA, please let's pray.
Someone prayed, and someone may have answered just a little bit.
I'm still here. I'm still standing. I'm still strong.
Well, the old adage, I think that people take summers off, so usually there's a lot lower volume that comes in. But I did find this interesting. From 1990 to now, so the average May through October, which is the months that people would have sold off, was up an average of 2% on the S&P 500, whereas the other months were up 7%. So, of course, there is a little bit of credence to it. But then last year, we kind of broke that trend because May through October was up 10.2% on the S&P.
Yeah, but last year was an anomaly,
Right,
given
granted,
everything went on in 2020. And
things were shut down. We were coming off that. But I'm just saying, we're not the same country as we were where the old adage came from. So,
Yeah, I think it's a weird stat because you got to take that context in. Everything's opening back up. But I love the optimism.
yes. Well, plus,
it's very well, yeah.
plus we got the midterms coming up later this year. So I think we could see some, I think we some interesting green in the future.
Well, and you've been saying for the longest time that we expect bullishism in
Bullishism?
Bullishism. I created it. I like it actually. Do you guys like
Say it 5 times fast.
bullishism? Ooh, didn't think I could do it.
That was actually really impressive.
How about try saying it backwards 5 times?
Yeah, I mean that should be doable. Let's see here. Mizalajub. Yeah.
Wow.
Yeah.
Did it.
Yeah.
Hands down.
We had all of these different events, right? You had the Fed minutes. You had the GDP contracting by 1.5%. And that didn't even stop us.
True. Yeah.
No breaks.
All gas.
No pumping them brakes, baby. We know a little bit about GameStop, right? We play video games. But now they're getting into NFTs?
Yeah, fancy that. They're parlaying into the space like a lot of companies that we're more familiar with on the stock market or companies we're familiar with growing up are looking to do. Obviously the metaverse and the crypto space isn't going anywhere. I think that a lot of speculative people in the industry are slowly starting to jump on the bandwagon just because they see how much liquidity is in the market. And I think GameStop might have an advantage just based on their market segment that they target, people like us.
Could be the fact that they're a meme stock and they have Wall Street bets behind them. And then
Definitely, yeah. Well, that's a very good point. They could definitely be, getting some rub playing off of that narrative as well.
And they might be ahead of the curve. That was the other thing is that South Korea, they actually just became one of the first national governments to invest into the metaverse.
Which is so crazy to me to think about South Korea being one of the first.
Yeah, it says they were among the first.
Yeah, man, good for them.
That's why we got to get that $3 avatar so we can start clippity clop across the digital landscape.
Yeah, I mean, it's $3. We might have to cop us some land in the metaverse so we can farm and breed and.
$4, $5, $6.
Yeah, there you go.
right now, us Bucks are pretty safe. The Bears, springtime, around June, that's when you hunt them Bears. And I'm liking that right now. Them Bulls are going to win.
I mean, I sure hope so.
Let's go, baby.
Getting my running shoes on as we speak.
Close your eyes. Can you smell that?
No.
Can you taste that?
Taste what?
Can you feel that?
Ooh, I feel my hand clicking like, follow, subscribe to the $3 Bucks, and it feels so good.
Let your voices be heard. The $3 Bucks on Spotify, Twitter, YouTube, and more.
Streamies! Hey guys, I want to know what streaming services do you currently subscribe to? Eric?
Yeah, I'm in Netflix for Cobra Kai, obviously.
Obviously.
Good show.
Absolutely.
What about Stranger Things?
Hey, yeah, that thing is being advertised right now. I hear it's pretty good.
Netflix has so
A
many good shows.
never-ending story. And then I have Disney Plus, that's for my kid, and then HBO Max, and that's obviously for friends. I'll be there for you.
No, you won't, because I cannot stand Friends.
Oh.
I know.
Can we even continue this podcast anymore? I don't know if we can with this guy.
Pivot.
I think we need to pivot and become the 2 Bucks.
You gotta be a sitcom fan to like that
You
show.
must have had a dry childhood. You don't watch sitcoms?
Nah, not really, no. Well, I will say this much. To be fair, I watched like Family Matters growing up
It's the same style.
and Fresh Prince of Bel-Air.
Same gimmick.
Yeah, I don't know. I just never got into it.
I cannot watch those laugh tracks anymore with the exception of Friends. But if you go watch like That 70s Show.
Oh, I know. Some of that's brutal. So is that all that you have, though?
Yeah, just those 3.
How about you?
All right. Well, I also have Netflix. So many good shows on Netflix. I just finished up Ozark, and I just started The Last Kingdom. But I also have Amazon Prime or Prime Video and ESPN Plus offered by Disney Plus. So
We love Disney.
Disney Plus.
Yeah, and I got Amazon Prime, but that's the thing about the Amazon Prime, right? It's like I don't even have it for the video service. We have it for shipping.
I mean, I imagine it is sort of a hub, but they have original content.
Well, sure.
The second they cut Sneaky Pete, I was done.
Ooh, Sneaky Pete. Yeah, I did like Sneaky Pete.
But I got Disney and I got Netflix and I got HBO Max for the Friends. Oh, we have Peacock. We have Peacock as well. We can't help but have The Office on in the background. So
No, I do like The Office, you see. And Office at one point was on Netflix. I think they just recently got delisted. Is that what we want to call it? Is this an appropriate show for calling it delisted?
how about CIDM? How much do you pay a month for CIDM?
This is the beauty. Look, Teej thinks he's going to stump me here, but for all of our viewers out there that are frugal, you don't have to pay a monthly subscription to be a fan of CIDM.
Speaking of frugal, what about FUBO?
What?
Yeah, how much do you pay a month for FUBO?
FUBO, I'm not a subscriber. No. I actually, listen, it was a hunt of the week of mine because it was simply something that I had my sights scoped on. I like sports and I like sports betting, and I think those are 2 areas that they're trying to make a run at.
I'm just messing with you anyways. Obviously, they don't have like a huge following. They're like 400,000, but what's Netflix at?
220 million monthly subscribers.
So they're a juggernaut for sure. The thing is kind of like what we just said about Amazon, how they have a little bit of range, right? Because they have their website where you buy things and you want to have that Prime service to have it get to you fast.
Yeah, they have different revenue streams.
Different revenue streams, right? So they're not only
like that?
this
Streams?
streams. Well, I'm saying Netflix is mostly,
Just
in
the
its
video.
own bubble. It's its own bubble of just a streaming service.
yes,
Whereas
yes.
you have Amazon Prime that has multiple revenue streams, and that's the same thing with Disney, right? If Disney Plus tanked, would Disney go out of business? No, they make movies. They own 40 or 50% of the market share of movies that come out now. They have
So-
their Disney parks that bring up revenue.
It sounds like you think Netflix has a pretty big moat in this space. Do you think that moat could be penetrated by any of these competitors? I mean, I'm talking about the names that we mentioned. There's a lot of streaming platforms.
We just said that Netflix has 200 plus million monthly subscribers, right? Well, they launched their streaming service in 2007, so they really have a long amount of time. They were one of the major players in the beginning before everybody jumped into the market. Disney Plus has only been around for a few years. Disney Plus is already at 88 million subscribers in just such a short period of time. And Netflix actually lost 200,000 subscribers this past quarter, which is why their stock tanked, whereas Disney has added 7.9 million new subscribers.
Also important to consider that Disney has been doing these partnerships, or they own multiple content, right? So you have Hulu, you'll have ESPN Plus, inclining you to get a membership with them, a subscription. Whereas Netflix, they don't even really have an ad-supported Netflix. I know they've been talking about bringing that in to be a game changer. I don't think it's going to make as big of an impact as they think.
Well, yeah, that's actually a very good point, Eric. If they're not even doing any ad-supported streaming content yet, and they still have the largest market share in the space.
Largest, but they reported losses of some of that market share. I know it's minuscule at first.
It's not necessarily minuscule. I mean, I think they probably reached an inflection point in the U.S. markets And that's why they're seeing a decrease. I feel like going forward, any subscribers Netflix is going to have would be internationally.
They're also losing a lot of viewers in the US, and that's because they've actually increased their rates.
Well, that's also another thing to consider.
Every so often you're seeing, I mean, every subscription is doing it, but then you have Disney that's doing other things. You have HBO that's bringing on Discovery, but then you have Netflix that's still doing the same thing they've been doing. They're really not offering much more to their subscription, but they're charging you more.
So if you had to pick one of the companies in the streaming wars to invest in,
I guess let's put it this way. If I'm an investor, no matter the doom and gloom of what's going on day to day, I think Disney right now, for me personally, DIS would be the best buy, just because year to date they're down a little over 20%. So there's definitely room to grow. They're growing their subscriber base. They reported that in their earnings. They've been doing acquisitions. They acquired obviously 20th Century Fox, huge major studio. So now they have all of that content, and anything that's too edgy or rated R, they just push that over to their other platform, Hulu, and anything that they can do PG or G or PG-13, they bring it on over to Disney Plus.
Is it?
But again, that goes back to they have multiple revenue streams, right?
So why can't that be an advantage for Netflix still? Because their main focus initially was premium content. Now I know that's kind of gone a little wayside recently. If their main focus is shipping great content to their viewers, then I don't think that they'll need an ad-supported, version, and I don't think that they'll have to worry about the competitors in their space.
I disagree, and I'm big on Netflix in the sense that I enjoy a lot of the shows. They've been like the pioneer of the originals for a long time now, and they have a lot of good originals, and it's just not enough. I feel like they need to get their feet into something else. They need to pull in more revenue.
Yeah.
You know where they really lost and took a big misstep? Is when they got rid of Friends.
I actually think that was detrimental. Was getting rid of Friends and getting rid of The Office.
Yeah.
Well, I know it was
huge things that
yeah.
they let other streaming services have that hurt their market. Because I know people that actually went out, myself included, to HBO Max just so that I could have access to Friends.
Well, see, that's an interesting point to me as well, because are there buyers out there that purchase these streaming services based on their original content? They want to see a specific show. Are they going there to binge watch Friends or The Office? Or are they just seriously, are they just specifically tuning into Netflix because they want to see the next episode of, Stranger Things, or they want to see the next episode of Ozark?
I can 100% confirm that people do that, and that's because Apple TV, Ted Lasso, that's such a good show. We get Apple TV just for that, and then once we finish watching it, we cancel it.
But that's what I'm saying. So are you really using Netflix or any streaming service for that matter? To your point, HBO, simply just so you have access to Friends in The Office.
Yes, that's the thing. Those
So
are
it's both for Eric.
well,
anyways.
those TV shows specifically are staples in our culture. So,
No, I don't like Friends.
well, you're not part of the staple, okay? But those are staples in the culture, and people are going to go there just because they like watching reruns of things. They like putting on background shows. Whereas the original content, you're going and you're watching it for the first time, viewing it, but it's oftentimes not shows that you want to rewatch.
I think it's having like a good blend of like leased content and your own original content. And I think Netflix is just going gung-ho on original content. And I think, I feel like they are. And the other thing too is, if I was Netflix, if I had any say in it, it would be stagger the episodes out each week after week. They release everything all at once. I can go in and watch Cobra Kai and finish it in one day, and then I can drop Netflix. I can't do that with Apple. Apple, I go in and they only release one episode of Ted Lasso every week. So they're at least gonna gain my subscription for a whole 3 months because I have to wait that out for every episode to come out.
How about Disney Plus? They'll release 2 episodes initially, and then it's 1 episode every single week. Once that finishes, 2 or 3 weeks later, they have another big advertised show that's coming out. So you're continually
I'm not opposed.
on game.
I that is a good point. I didn't acknowledge that point until now, but I'm not actually opposed to allowing people to binge watch their favorite show. It's almost a part of culture in that regard.
The thing is you can always binge watch it once it's fully come out, but to keep them buying your service month after month, feed them crumbs.
It's
For the sake of the shareholders to report out good, just like Disney's doing, right? They report out gains. I mean, I think that's the way you do it, is you have to keep them hooked by doing episodic releases.
No,
I think
Netflix is just, they're like a gym. You know, they get you to sign up and you pay every month, even though you may not watch every month.
Yeah, except for
'Cause
if
you just
your
wanna be
gym
able to
membership
catch-
was raising their rates every single month. I feel like I get a notice all the time where they're like, hey, we're bumping it up $1.
Well, that's you should have stole somebody's password.
Well, they're cracking down on that.
So let's chat I-Poos.
Yes.
I-Poos? What's an I-Poo?
I-Poo, that's what I had when I left your house after Memorial Day when I ate those meatballs.
It's a spice, man. It's that spice.
It was that spice.
Teej's notorious meatballs.
IPOs is what I'm referring to, right? In the stock market, that's an initial public offering. That's when a company determines, hey, I want to go public. I'd like to raise some capital. I want some money.
Yeah.
The year 2020 had the most IPOs ever, setting the record at 480.
Wow, gosh, how many meatballs was that to have that many I-Poos?
Yes, I know. Then, year 2021, it had over 1,000 I-Poos.
More than double I-Poos.
So many, yeah, more than double I-Poos of the previous high I-Poos.
Wow, okay. Yeah, it's a lot of poo.
Yeah, it is.
Why record I-Poo year in 2020 and then a record-breaking I-Poo year the following year of 2021?
Well, I think my theory is because 2021 we were on like a huge V-curve bull run with things opening up, and it's like I don't think a lot of folks want to run an IPO like in a bearish market. They want people to be kind of hyped and energized in a market where people are already feeling that way and buying stock. So that would be my theory. I didn't read up on it.
In 2021, it was fueled by the popularity of SPACs.
In this case, the SPAC it would also still be considered an I-Poo?
SPACs are poo.
Okay.
Yeah, I-Poo.
Okay, nice.
Of the 1,033 I-Poos that we had, 59% were SPACs. And for anyone who doesn't know what a SPAC is, it's essentially a company that's going public attempting to purchase another company.
Yeah, it's special purpose acquisition company. Yeah, basically like a blank check company. Company that's already on the stock exchange that merges with one that wants to be.
Yeah, they almost get on
Much
there.
cheaper.
They get on there with no specialty. People invest in them based on rumors, hoping, hey, I can put my money here and maybe they'll buy another company.
Yeah, true.
And if you're right, awesome, but it's a huge gamble because you're literally buying a shell of a company. It's nothing.
Pretty much.
It reminds me of one that I've actually been invested in.
What's that? Which one?
A buddy of mine told me to get into this.
Uh-oh.
I feel like when I lead with this, it's always my buddy B.
We could have this discussion, but I feel your pain, brother. And you know,
Uh-oh.
Yes, I know you feel
know
the
it's
pain
coming.
because we're in it together, brother. When I first invested in this, it was called Give.
Oh, yeah.
You know, and it was a giver of gains
or so you thought.
for like a week or two. And then once the SPAC actually occurred, they actually merged. It was more like give me your money.
And it's gone.
And it's gone.
Well, listen, if I knew back then what an I-Poo really was, poopy, then I don't think I would have followed that lead. But yeah, so essentially, Give turned into UWMC, and it weighs down my portfolio every single day.
It gave me a lot of green.
There we go.
It gave me a lot of green. So I have positivity to say about that particular ticker.
Gave me a lot of brown.
I want to hear more Teej.
It's a brown down. The thing about IPOs, it's tricky because people get really excited, get really hyped. You know, the Airbnb IPO, I think that was like last year that came out. And I always get really weird about them because the hype is almost, it reaches such a level that whatever they say the list price is going to be, it ends up being so much by the time that it opens. And then there's usually some sort of incentive given to maybe people that are either employees that own the stock or insiders. And what ends up happening, it seems like a lot of the time, is a sell-off like within days or sometimes even the same day. And you have all these people that were excited to buy the stock that end up becoming bag holders of the stock while the insiders profited.
Yeah, it's never really worth it unless you're one of those on the inside, if you will, or have special privileges with their brokerage account that can get in on the IPO.
Especially going long on an IPO, like on launch day. Like really, I'm a long trader, but on IPO day, I'm more of like a swing trader. I know.
Right.
I think I swung Rocket stock, RKT, Rocket Mortgage, a few times within like the same day, just because the volatility was there, and that's what you want from a swing trading standpoint. But if you're trying to go long, you just have high conviction, it's almost best to let the hype cool down, in my opinion.
Yeah, oftentimes the first day can be super volatile. It can jump up and down, but they say like 38% of IPOs end up being down after the first day, and about 50% end up being down by the second day.
Because you're better off just waiting.
Right, you might exercise caution. You know, for Airbnb, for example, they said they were opening at $68 per share.
Oh, it was like double or triple that by the time it actually opened.
Airbnb ended up opening at $146 per share.
Yeah, so
Quite a bit more than the $68. But people that were insiders were able to get it at that $68 rate in pre-market or before it was released. So
and sell off, and then you had the public.
Actually, small correction though, they can't necessarily sell off because there's a lockout period.
Yeah, there's a lockout.
Interesting.
Yeah.
It's usually 90 to 180 days. So it just depends on what the IPO has set. So it's really important to pay attention to that date because you could have the stock basically tank when that date hits because you might have a lot of people selling off. But speaking of Airbnb, real quick, my wife and I, we were kind of navigating the internet because we wanted to find a place to stay. We saw this nifty little place that was a romantic spot, a night under the stars.
Oh wow!
Yeah, it was beautiful. Man, it's a budget. It's like $75 a night. You can't beat that.
Especially Airbnb.
Yeah, so we checked it out, and it was a tent on a slab, concrete slab, private. It sleeps two, and it has a private bath.
What's the location?
It's in Dublin.
Dublin.
Ooh.
Dublin. Yeah, so you get to sleep in this guy's backyard. But I mean, $75 a night, you can't beat that.
No, I mean, shoot, a hotel would be like, gosh, probably
$69.
$10 more than that. So this is a steal.
Yeah, yeah. And I heard the tent has a bathroom.
Yeah.
Right,
It has its own bathroom. I think really it's just like some way you filter yourself probably into this like deep
back door
alleyway door to this dirty looking well. At the end of the day, I like firm mattresses, so that concrete slab will suit me well.
Come on, you guys never spent a night in jail? Best sleep. Best sleep.
Well, picturing you have to go to the bathroom or you want to make food and you have to like go knock on some stranger's door. Like,
Yeah, I didn't even think about that.
Can you think about if you had to
What
go at
about-
like 2 a.m., 3 a.m. or something? You just wake up in the middle of the night, stupor, like trying to knock on that dude's door.
how scary would it be if he answers it right away? What's he really doing?
It puts the lotion on.
Yeah, no, I'm not going anymore.
But back on the topic of I-Poos, there is a lot of hype.
Coinbase was on fire the first day. I remember they were saying, oh, this is going to be $300, $400 stock. And maybe it will soon eventually be that. But the day it opened, I mean, it opened close to $300 or almost close to $400 a share. And look at it today. It's $78 a share. Talk about a fall from grace.
Yeah.
I mean, granted, the market we have right now, but yeah, people were riding that hype train day one.
It is largely a hype thing. Unless you can get in at, call it pre-sale.
It's kind of like NFTs because I just bought my my first NFT officially
Yes.
the other day.
Oh, ring the sirens.
Woo woo!
More like the cash register.
Cha-ching, cha-ching. I hope so. It's more like the cash register when I'm spending those gas fees constantly. But you know, I'm pretty happy to get into the NFT game, and it is fun when you're minting something. It's the hype train right there.
It's
You're
the
like,
reveal.
should I take the mystery box, or
It is,
should
yeah.
I buy something that was already minted?
Yeah.
Is there any upcoming IPOs that that we can get excited about and then tell everybody to calm down and wait for the hype to pass?
Yeah, I'm staying away from the IPO game. I've learned my lesson.
IPOs typically they release when they're going to open up about 7 to 10 days beforehand. I checked the calendar a couple days ago. There was nothing. So.
Yeah, there's not any that I saw that were impending either.
Hunt of the week. For the month of May, we finished up. So there's always opportunities around. You just got to scope them out. And for this segment, we're going to tell you what we recommend putting on your watch list. I'll start with Citigroup.
Ticker symbol.
Pretty simple. This company, everyone knows them. They're a banking company. They closed at 53.41 today. In the recent history, they've been in the 80s or close to the 80s, and they pay a dividend. Pretty simple right there. 51 cent dividend quarterly.
Diva who?
Diva who? Speaking my language.
Diva who?
Yes, absolutely.
Dividend.
Where I stand with this is based on my sentiment. Citi right now is trying to get into the crypto game. You can actually get crypto through Citi. So I see that as a growing sector. And then on top of that, you have the interest rates of housing markets that are going to be going up. They're going to be making more money on their loans. And then guess what? If they choose to forgive student loans, you know what doesn't get forgiven? Private loans.
Yep.
Simply, I just see this as a stock that's going to be safe and continue to grow and go forward in a positive way.
And they have fancy credit cards. There's Citi cash cards that give you cash back. And credit cards are getting used a lot right now with high inflation.
Yes, and you know what else? I got a Citi card. You know which kind? The Costco Anywhere card, baby. Let's
here we
go.
There we go.
Mm-hmm. I had to tie it in somewhere.
Costco somewhere. I knew you were gonna throw it in there somewhere this episode.
This is a long-term play for me. Teej, what do you got?
Yeah, Eric, I got something you can pick up with your Citi credit card. And that's some Diageo, ticker DEO. They make a plethora of liquors. Some of the most notable kind you've heard of is Crown Royal, Ciroc.
I do like Ciroc.
I do
Smirnoff.
like my liquor.
Right?
5 times this deal.
Delicious. According to Simply Wall Street, they are undervalued right now. They're priced at $185 with a fair value of $242. They do pay a dividend, and that dividend's at 2.02%. And they have forecasted annual growth of 8%. And hey, it's the summer, man. People are drinking more in the summer. That's the time that people drink. So Diageo is going to be my summer kickoff hunt of the week. And I got a feeling you could probably find some Diageo product in your hunt of the week, B.
Yeah, so speaking of summer, I'm going to piggyback off of that. And my pick of the week is Carnival Corporation, ticker symbol CCL. They are a cruise line. They closed at $13.88. I am going with them because such like the airfare industry, consumer demand for travel is still strong. And I think that people are going to flock back to going on cruises as well. Normally they do about $20 billion a year in revenue. Since the pandemic in 2020, they've been netting about 90% of that. So I definitely think there's room for growth. It's, for me, probably like a swing trade, maybe something to hang on to the next 3 months. I want to see if that consumer demand is still there. So I'm curious to see what next quarter's earnings are for them.
When I went on the cruise, they had like all you can eat. Now with prices of food, I can't imagine the all you can eat that they probably give you is probably scraps.
There's probably an asterisk. It says all you can eat, but a little asterisk at the bottom, fine print.
For
all you can eat on one plate.
All right, gang, it's hunting time ahead of a new week of opportunities. Thanks for listening to Your 3 Bucks. Talk about hot dogs that are tacos and meatballs that make you go I-Poo and streamies. But we talk about NFTs, cryptocurrency, and stock equities. So tune in with us every single week on Twitter at 3_Bucks. Got a suggestion? Tweet us, DM us. We want to hear from you. Tune in to us every week. And until next time, happy hunting.